Trading Tip Tuesday once again, and I've been getting a few questions from a few people about all-time high targets. What do I do at an all-time high? How do I know that it's an all-time high? What can I expect? What should I, people want to be prepared. People want to be ready. I talk about all this stuff I'm about to talk about in this video, in various other videos frequently, but this is just a master list of things to look for ahead of the game, before we get there, what to expect. If you have a plan, if you have some target in mind, that way when euphoria takes hold and the brain is surging with dopamine or whatever, and you're thinking about getting your second and third yacht, you can remember that you're probably not going to be a community member. You're probably more of a trader than an investor, at least most people. This video is not for investors. It's not for traders. It's not for people with necessarily a multi or time horizon. Me personally, how I treat my own funds and capital, 50% of it is mega long-term hodl. The other 50% for me is actively traded. I think for a lot of people, that's a great way to split it up. For most people, they shouldn't even be actively trading, but that's another video. But let's say we're all traders. I'm talking to the traders in the room. How do we try to plan ahead? Because ultimately what you don't want to have happen is you don't want to be looking at the chart every 5 minutes when you're at work or when you're trying to sleep, thinking, when should I sell? What should I do? This is all assuming we even go to all-time highs on any of this stuff, and we don't just flatten out at previous all-time highs. So I'm bullish. I'm incredibly bullish this quarter. No secret. Talked about that a lot. What am I looking for? What do I look at? So the first list, are we there yet? These are the top 4 things I'll be looking at. Assuming you can get the data for all of these coins and whatever, I can get most of it for BTC. I can't necessarily get a lot of this stuff for altcoins. One thing I wanted to see when Doge was at an all-time high or pushing those crazy levels, I wanted to see the Puel multiple, which is a measure of basically how rich are the miners getting, because I knew they were making insane multiples on mining. I just didn't have the data for it. So knowing where to get the data is the first step to even forming the checklist, knowing what to look for. As far as targets are concerned, all this stuff you can get on TradingView. The checklist itself, most of it you can get on lookintobitcoin.com or checkonchain.com or any other site that has this information, but those are the 2 that I use. So this is my master list. Targets are honestly the easy part. The checklist is the harder part. The checklist is more subjective, requires more backtesting and maybe psychological understanding of market participants. That may be overstating it, but you kind of have to know, what are people thinking? What is everyone else doing? Everyone's getting rich and you're not, right? That sort of stuff. What are they going to do? What are they about to do? What are they most likely to do? What is the on-chain stats telling you? We can look at all this information. It tells us, blockchains tell us when stuff moves, timestamps everything, and we can look at herd mentality and figure out generally what are people doing at certain levels. So starting with the 2-year MA multiplier, I mainly use this on TradingView. You can pull this up on TradingView as an indicator. And if it doesn't have 10 years of data, which it won't unless it's BTC, use the 365 MA, which is the 1-year MA multiplier, or even the 183, the half-year MA multiplier. So you can either change that indicator on TradingView from 730 to 365 to 183 on the daily, or just move down to daily, the 12-hour, and so on. So once you figure that out, the next thing you're looking for is backtesting. Does this actually tell you anything, right? Is it useful? Is there a signal here? Does it tell you lows? Does it tell you highs? How has price reacted at those levels? Has it pushed for weeks and days above those levels? Or has it been the exact top every time? Just looking at BTC here, it's been a signal previously telling you we're getting there. It has not been the ultimate all-time high. It has just been a signal telling you, yeah, now's a better time to sell than to buy. And if we look at the target is currently 115. So anything above 115, and it's telling you to start selling. Now you can get ahead of the game and already list orders at 115 plus. It sounds insane, right? We're at 56 or whatever, 55 today. So that's a 2x from here. Ew, filthy fiat. I don't want to hold fiat. I get it. Again, this is for traders, not investors. If you want to get ahead of the game, look at the MA multiplier for whichever coin. I'll pull up link in a second as well. And it gives you expectations for not only just all-time highs, but just in general, right? This will continue to move up over time. So let's say we bleed this trend into 2022, which I don't think will happen, but let's say we do, and this goes slow, we're looking at crazy, crazy values here. I don't think that's what's going to happen. I think we're actually going to have some euphoric top in Q4. But even if I'm wrong, you can keep looking at this, and I'll keep looking at this continuously to tell you where is a good time to start selling, right? This isn't going to tell you where to start selling on leverage. It's not going to tell you where to start buying on leverage necessarily. This is a high bird's eye view of what's going on. 200-week moving average heat map is another good one if you can get the data for it. Not every coin has this 200-week heat map, or 200-week moving average rather, because it just hasn't been around that long. But you can think of this as distance from the 200-day or 200-week moving average, giving you overbought, oversold potential. What does it look like on backtesting? That's extremely important. You want something you can backtest with a blink of an eye. This is super simple, right? It's in the red, meaning it's increasing extremely quickly above the 200-week moving average, telling you, be careful, this is super overbought up here. Again, that's hard to get with every coin, but something you can look at. Pi cycle top, you can also pull up on TradingView. What does it look like on backtesting? What does it tell you? In this case, it's been the exact top within 3 to 5 days or 5 to 10 days, whatever it is, every single time. Every single time we've hit an all-time high, it has been correct. So going forward, it's going to be right until it's wrong. So if we get a cross at 99K, then that's the top, right? I'm not going to pretend it's not. And it's good to always acknowledge this stuff with sell orders, even if you're still bullish, even if you think it's going higher, right? If you think it's going to 250K, whatever. It's good to let a little go, because even if you're right and the indicator is wrong, at the very least, it helps you have some sanity of where to sell, lets you be prepared. Logarithmic growth curves, again, it's something you're not going to be able to get on every coin because there isn't enough data, but what does this look like on backtesting? It has sniped the exact top 3 times, right? Currently, that sits at 135K. This is going to look different for every coin. It may not work for every coin. It may not be as clean, but again, 130 plus is telling you, yeah, it is time to sell. And this is going to keep increasing slowly, but so far it's shaping up to be targets are 115 based on 2-year MA multiplier to 134 based on logarithmic growth curve. So those give you targets. And if you want, you could set up a spreadsheet every day, look at it, or every week, look at it. What are the targets? And then you move your sell orders from there. This is obvious to most people, but to a lot of people who don't trade actively, we kind of get to these levels, they panic or they FOMO too late. They buy when they should be selling, sell when they should be buying, right? Everybody knows how to trade, right? Buy low, sell high. But virtually no one as a percentage of total traders do that. So you need to be ahead of the game in that regard. Something else I think is stupid simple to use is Fibonacci Extensions. Again, this is on TradingView. All I usually do is pull the most recent high, which is sometimes the all-time high, or the local high, to the local low. For ETH, super clean, super simple, gives you a value. I use the 1618 to the 2 extension. In this case, the expectation, if we break higher highs, if we break all-time highs, is between 6 and 7K. Baseline expectation. That means I personally will be selling ETH at that level, between that level, right? Having orders there already ready to go, right? Just lets you go fly a kite, lets you go play in the park, right? You don't need to be looking at the chart every day. I know some people prefer that, but those are the levels that the fibs tell you, yeah, it's a good place to let it go. For ETH, for altcoins, these crazy percentages we've seen, you'll see these run to the 2618, the 3618, the 4618. I don't think I've seen the 5618 yet, but you'll see them keep going, which is one reason why you should never just let everything go at 6K in this case, right? At the 1618. Give it some room to breathe, slowly let some go over time. This is something I use even for leverage. If I'm trading on leverage in a long-term trend, I let some go at the 1618. Depending on how it looks between the 1618 and the 2, you can let some go there. It's the all-time high. How does it look? Is there a bear div? What's going on? Can this go to the 2618? Hold a little bit more. See if it can go higher. Set some asks up there, right? And the pitchforks on here because this also gives you a time component. This is, again, super simple and obvious to anyone who's ever used this stuff, but pitchforks is pick 3 points, you get a rate of change. This is the expected rate of change going forward. If price holds within these levels, if it's bound within this level, this channel, then the expectation is the buy zone is here, the sell zone is here, much like an oscillator, much like the MA multiplier. Now, if this drifts below the pitchfork in this case, for me, that doesn't necessarily invalidate the rate of change, but it does tell you the expectation is dwindling and significantly lower than it was when it was in the pitchfork. The other thing about pitchforks is the expectation is we eventually do tap this midline, this yellow line here. So for me, at this point, I'm actually expecting 6 to 7K before November, which is hyper aggressive for current price, how this looks, right? Maybe this is a cup and handle, maybe it breaks down, I don't know. But based on the pitchfork, if this holds, I'm expecting 6 to 7K. If we break 44, I'm expecting 6 to 7K based on the fibs. A lot of this stuff points to the same levels. Usually it's all looking at the same stuff, but you do want some confluence when you're putting all this stuff together. BTC kind of gives you that same scenario in a different way, but with the fibs, it gives you 87 to 100K. So you could already set asks for those levels, right? Just layer your asks up here, some long-term trend stuff, and let it go. I put the pitchfork on here less for determining bullish continuation in the near term, more for figuring out, are we out of this trend or this channel yet? Now you could always just put horizontals on here, but I like to get fancy and put a pitchfork on here, and I like that it respected these levels, it respected these boundaries for the most part. So if this breaks above the current high on the pitchfork, which is probably around 70K, then I like these fib levels even more because it says this rate of change is now broken. We're actually more bullish than we were previously, which was actually more neutral than bullish anyway. But it's another way to use the pitchfork and to let you know, yeah, it's going, right? It's different than it has been. And if you zoom way out for the pitchfork stuff, this is a BTC pitchfork since 2015. You can't do this for a lot of coins because obviously they weren't around then. But anything you can do this for, any way you can get large backtesting data, the better. So in this case, a lot of people would say this was invalidated here because it was above the pitchfork. It was invalidated below the pitchfork, right? But for some strange reason, it topped out both local highs, all-time highs, at the top of this level. So am I going to ignore these levels going forward? No. Are they better represented in other indicators? Maybe, but this is another thing you can look at. Some high time frame pitchfork. And again, these levels are going to continue to increase day over day over day. Currently, expectation for a top is at 90K with a midline touch probably around 75. Anything above 75 and you're expecting it to reach the higher end. But again, this is another level you can look at and watch, set asks, are we there yet sort of mentality, right? This isn't saying it's going to be the top because historically it wasn't always the top, but it is telling you, yeah, we're getting closer, we're getting closer to the end, closer to the top than the bottom, certainly at that level. So let's say we're above 90K, we're above 100K, we're above 150K, then I start to get nervous that we're in bubble territory. This is probably the most down to earth pitchfork. Again, I'm just focusing on BTC because there's data for it and it looks good, but you can apply this for anything. This is since 2019. I got some comment a while ago about not using this Corona breakdown as a pivot point for the pitchfork, and that's nonsense. If it's on the chart, you're going to use it, right? Like that's the whole point. But anyway, pick 3 points, you get a rate of change. It's respected these levels. It's respected the highs. It's respected the diags. It's respected the neutral rate of change zone in the blue and the yellow here. Currently, we're above this. So yeah, I do like something into 100 plus range. And as far as a timing component, it says 100K by January. The 33K by July stuff was birthed from the pitchfork. It ended up being wrong, but it also told you when it was wrong. If this breaks below the pitchfork, yeah, that's not the expectation anymore. But so long as we're on this side of the pitchfork, the expectation is we do reach for the white part of this, the upper channel at some point in time. So that would be a part of the target checklist, the are we there yet checklist. We can do this for Link. Link looks abysmal trash right now, right? It's below the 200. It's neutral. It's ugly. It's also kind of at the 365 MA. It's below the pitchfork even. But my expectations for the targets here are still 70 as a midline touch. And then if this gets actually super bullish, I like 140 based on the MA multiplier, based on the pitchfork. And this is multi-year data, which is why I'm super confident in those targets, why you can look at this seriously. For something like Solana or FTX or Phantom or any of the new stuff, I have a harder time trusting those targets because things can explode one day, collapse the next, and it's very much flavor of the month, flavor of the week sort of stuff. For ETH BTC, if we put all this together as well, Fibs, the most bullish fib scenario would be 0.23 to 0.3, which would be disgusting, but that's certainly possible based on fibs. Currently, though, it's stuck within the bounds of this pitchfork. I don't trade this directly, ETHBTC. I think it's a mess. I think anybody who trades it directly is clinically insane, but the trend rate of change has held. You can't argue that since 2019, right? Since this sucker was formed, it has told you when it's bearish, told you when it's neutral, told you when it's bullish, told you where the highs were, told you where the bottoms were. And now it's probably going to cruise in this bullish but neutral zone on the yellow midline here, blue, whatever you want to think of that as. It's certainly much less bullish than it had been previously over the past few months. Seasonality expectations were always Q4 for ETHBTC has been horrible. It's never been positive against BTC in Q4. But anyway, let's say all that's wrong. Let's say this breaks the pitchfork. The expectation immediately is then, yeah, we're going to 0.23, 0.3, right? Based on fibs. If we can break this 50% fib from high to low, we are retesting all-time high, and then after that we are going to 0.3, almost certainly. But we're not there yet. If this, then that. This is definitely part of the checklist. mvrv is another one I talk about a lot on all the videos because I think it's incredibly useful for picking highs, picking lows, use backtesting, use common sense, right? Where are the highs in price? Does it match mvrv highs in spikes? It most certainly does. Is there some level we can watch? There most certainly is. Anything near 7 or at 7 or above 7 has been an all-time high local high historically. Maybe you're not counting this in June, but let's say 5 of the 6 times we've formed a local high, local top. mvrv has been dead on the money telling you, yeah, hey trader, it's time to let go a little bit here or a lot of it here. Currently, we're safe. We're in the not yet euphoric stage at 2.6. And what this is looking at is market cap versus on-chain activity. So it's telling me if market cap is several multiples above actual utility, then we're just speculative bubble territory. So let's say we get to 100K, let's say we get to 130K, whatever it is. What does mvrv look like? If mvrv is at 7 or above 7, you better believe I'll be selling more than buying at that level, okay? This is one way to remove yourself from the situation. Just look at the data. Doesn't say sell everything at this level. Doesn't say you don't believe in the future of BTC. Doesn't say you don't want to be a community member. It just says based on data, this is a good place to sell, right? For DeFi though, this has been useless. I've looked at virtually every DeFi coin I can with mvrv, and it just there's no signal there, so I would ignore it for DeFi stuff. Puel multiple, anything with mostly proof of stake, but I guess any daily coin issuance, you can look at this if you have the data. Look into Bitcoin. Philip Swift is what he goes by on Twitter. Follow him. Check out his website. He does everything that really you'd need. You don't even need TradingView or anything like that. You don't even need me. You just need this website. But the Puel multiple is another one that historically has been pretty good. It hasn't been as good as mvrv, I don't think, but has been pretty good at telling you how rich are the miners getting today versus the past year, basically, is what I'm looking at this as. And again, if we're at 100K, if we're at 135, if we're at 250, whatever the top ends up being, right? What does this look like based on backtesting historically? Is this way above 3.5, way above 4? Is it at 10? You know, are the miners getting stupid rich relative to where they were over the past year? Which is going to be tough because issuance is at 2%, right? So it's going to take a massive push in price to really move this up, which is good. It says we have a long ways to go. And then lastly, one that I really, really like is the hodl waves. You don't have this for every chain. For every chain, it's not necessarily useful or valuable. Like Decred, I looked at it, and hodl waves there to me don't really point out highs and lows or psychology or herd mentality very well, because there's a lot of active coin movement on chain because of the ticket system. If the chain has a lot of coin activity just organically or because of fundamentals, then it's kind of going to blur the lines as far as what you'd expect for highs and lows. But what the hodl wave is looking at is when have coins moved, how many coins have moved in the past 24 hours, the day, week, month to 3 months, 3 months to 6 months, 10 year plus, right? I don't really care about anything beyond 3 to 6 months because it doesn't really tell me much in terms of relative to highs and lows, at least that I've noticed. So I get rid of all those. What I'm looking at mainly here is anything that's moved in the past 6 months. because historically the highs in price have been heavily correlated with coins that have moved in the past 6 months as a percentage above 50%. So for me, this is more of an unhodl metric. Are long-term sellers unhodling and doing something with the money, right? Buying a house, whatever. It's usually something like that. It's life-changing for a lot of people if they're long-term holders for much lower levels. So it's perfectly understandable that they're selling as we go higher. Currently, we're going higher in price on a lower hodl wave, meaning there's less and less coins moving, right? Everyone's saying, nope, I'm not selling, right? It's like deal or no deal. And nobody wants to get rid of anything right now, because for me, that's saying they think this is going to go much higher. So until we start seeing these metrics increase when price goes higher, I don't think there's any reason to sell at all. And you could say over time, maybe this thing will start to decline as a percentage of activity. Maybe previously it was 60%. Now, then after that, it was 55. Maybe it's going to be less than 50, right? Maybe 45 to 50% of the chain moving is going to be the top. I don't know. We got to find that out. But let's say we're at 100K plus 150K and hodl waves are at 55% in the past six months as far as coin movements are concerned. Yes, that is telling you everyone relatively is selling here. It's probably a good time, right? The herd is to saying, this is a good level for me to jump out. I'm in heavy profits here. I think it's either overbought or I think I can use this money for some other purpose, right? So hopefully this video was helpful. If you use anything that I didn't mention in this video for an all-time high checklist, are we there yet? Or all-time high targets, let me know in the comments below. Like, dislike, share, subscribe, and happy trading.